The day, it's a rounding error when you look at 120 billion in cash and 20 plus billion in free cash flow. So we'd like to see them do more with that cash, potentially ramp up the buybacks, 25 billion authorization last quarter. So we think there's a lot of opportunity to return value to shareholders. And hopefully tomorrow, if the stock's down, they'll go in and buy back some more stock pretty aggressively.
Trip, what about using some of that cash to make some plays in the cloud space? Is that something that you want to see the company do?
We do. I mean, we'd love to see them grow that. We think there's a tremendous opportunity among all the players in that space. You obviously saw last week both Microsoft and Amazon slow down a little bit in their growth rates, but versus the rest of the businesses that they have, this is a segment that's still growing, fairly rapidly, and we see a big opportunity not only over the years but over the next decade there. We think strategically they could deploy their capital a lot more wisely than just sitting in cash, but cash is oftentimes a very nice thing to have, and we believe long term that they'll do the right things with that cash.
Ali, how are they doing in cloud compared to Amazon and Microsoft?
Well, compared to them, of course, they're still the number 3 player. But in terms of market share gains, in terms of taking market share away from the two other players, we still think they have a long way to go. But as your other guest mentioned, I think it's a very attractive market. We actually have them growing at a 45% CAGR the next few years. So we think they'll actually make some traction on that end. In terms of acquisitions, on the cloud front, we're actually waiting to see these guys continue to invest to enhance their sales force on the cloud business. I think that's the most important thing. They brought Tom over, and they're bringing on additional former enterprise software executives and salespeople. So I think that's in our opinion, that's the best way to strengthen their cloud side of the business. And then after that, hopefully, a few years down the road, hopefully again allocate a little bit more capital towards acquisition of some cloud businesses.
Trip, there's been a little bit of a theme running through the research and commentary on Alphabet that it should be viewed on kind of a sum of the parts basis, whether you want to take YouTube, some of the other bets, cloud, add it all together, put it a kind of a market peer multiple on it, and all of a sudden you have a higher stock price. Is that valid at all with really no clear line to an idea that Google might ever really split itself apart in that way?
I think it's one way to value the business, and it certainly helps to look at a business multiple ways when you're considering investing in it. Certainly on the sum of the parts, we think that a division like YouTube is heavily undervalued, and their other bets column that is burning through several $1 billion a year in cash, we think at some point could pay off big time for them. So when you think about the business that way, there's a lot of value in it. But we tend to look at the free cash flow coupon of the business. That's growing. It's very compelling, although as value investors, we tend to not want to go and buy stocks at 52-week highs like we saw earlier today. So, for us, it's another way to look at the business. You're correct on a breakup value, but we tend to really focus on the free cash flow when thinking about a business like Google.
Ali, how much political and regulatory risk is priced into the stock at the moment?
That's actually tough to say. I would say, and because it really depends on how the previous or how the antitrust acts are actually interpreted these days. As you know, the Sherman Act and the Clayton Act. So if the judgment is going to be sticking with precedents, which basically say, we don't want to see any indications of too much pricing leverage and at the same time lower quality of service, then that's in favor of Alphabet and Google, because they certainly have enhanced their quality of services, and they're certainly not charging us anything. So from that standpoint, I think it's positive, but that remains to be seen. I just wanted to make one comment about the sum of the parts that you mentioned. Let's not forget that I did agree with most of the things that your guest mentioned, but let's not forget that nearly everything that Google is providing runs on one platform. So if you're breaking up these different assets and or these different services, some of the parts would be one way to value it, but we should also take into consideration any value destruction that may take place. Because again, most of these are being operated on one platform.
Thank you both for joining us, gentlemen. We're going to have to leave it there, Ali and Trip. Coming up next, much more on Beyond Meat's latest results. The company beat, but the stock is now down almost 8%. How should you be looking at that stock? We're going to break it down after this break.
Hey, did you?
Yep, done.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
Deep left center field, a grand slam!
October baseball is here, and TuneIn Premium is your ticket to the 2019 MLB postseason. Featuring the home and away feeds for every game, TuneIn Premium delivers every call of the ALCS, NLCS, and the 2019 World Series through the voices of the local radio broadcast teams.
In the air, left field and deep. He's at the wall!
Now until a new champion is crowned, hear every play of the 2019 MLB postseason live on TuneIn Premium. Upgrade today.
From the TuneIn Studios, I'm Fonseca with your daily sports update. Well, Houston was triumphant. Yeah, Houston got a firm grip of the series by beating the Nationals 7-1 Sunday night for a 3-2 lead in the World Series.
I feel like we're in every game. We've had, games where we've come from behind.
And the series is continuing with Game 6 this Tuesday right here on TuneIn. To find it and to favor it, search MLB and then favorite your team. Just click on it. Simple and easy. That's your TuneIn Sports Update.
Far wing, elevates, triple bucket.
The war of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut it.
The sideline, the man bleeds for 3.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now. Hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the
Search
right.
NBA today to start listening.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know. Looking for a new podcast to inspire your work life? On the latest edition of Pod Club, Adam Grant, host of TED Podcast Work Life, shares the pods that have blown his mind.
For Work Life, the top 3 episodes I think everyone should listen to. Gosh, that's like choosing a favorite child. I guess I'd pick How to Love Criticism, Your Hidden Personality, and The Creative Power of Misfits. And if there were a 4th, How to Trust People You Don't Like, and a 5th would be the debate I had with Malcolm Gladwell.
Go to Podcast on TuneIn to see Adam's Pod Club picks.
Ah, finally another commercial, said no one ever. Visit TuneIn.com/premium to upgrade now and get over 45 commercial-free music stations.
Welcome back. We've got breaking news on Mirati Therapeutics. Meg Terrell's got the details. Hey, Meg.
Hey, well, these were highly anticipated clinical trial data out of a cancer research conference for Mirati Therapeutics. They're coming in, and Mirati's stock is higher on these results. People were especially looking for how this drug did in non-small cell lung cancer. And in that, they are talking about just 6 patients that they have so far in this trial, and 3 of those 6 showed what's known as a partial response. Now, I'm not going to go into all the details of that, except to say that is similar to the data that we've seen so far for a competing drug from Amgen, and that is generally the benchmark that investors were looking for here in order to consider that sort of a positive result from Mirati. And obviously, you can see the stock is up about 18% there. Additionally, some initial responses I'm getting just from folks on the street now saying it doesn't appear there's any major safety concerns with the drug too, so that still, in these early data, looking good for Mirati, up now 19% in the after hours. Courtney, back over to you.
Good news for bullish shareholders and for patients. Thank you, Meg. Thank you. Well, shares of Beyond Meat sliding around after reporting earnings moments ago. The stock has really been on a roller coaster this year since it debuted in May, down more than 60% since its summer highs, but still at more than 300% since its IPO. For more, let's bring in Brian Holland from D.A. Davidson and Kate Cox from New Food Economy. You know, Brian, if you look at this quarter, they did turn a profit in so many of these IPOs. That's been the problem, right? We've seen this rocket higher growth when it comes to revenue, but no profit. How much does that mean to you here for Beyond Meat?
Well, I don't think it's insignificant. It certainly came in ahead of expectations, including my own. The profitability ramp is certainly something to be encouraged about, although I would say it was largely expected, given the number of new account wins and tests that have evolved over the course of the quarter. But I think going into this evening's earnings call, folks will be focused on both the competitive landscape, which also has evolved very quickly, and certainly the lockup, which expires today.
Kate, it seemed like for a while there we just were hearing about a new partnership every day or every other day for Beyond Meat. How do you evaluate those business opportunities? I mean, what does that really mean for Beyond Meat to have that distribution?
Well, I think it's important in the sense that it increases, awareness, customer awareness, and market ubiquity. But it's also kind of worth remembering that not every partnership that has piloted a Beyond product has ended up putting it on the menu as an item officially. Tim Hortons would be one of those partnerships. And back in the summer, I said that McDonald's was sort of the holy grail of partnerships for Beyond Meat, and we didn't know what was going to happen. Last month, McDonald's announced that it was in fact going to pilot a Beyond product, and that's a big deal, but it's not a slam dunk. We don't know what will eventually happen, if it'll become an official menu item, if it'll be region specific. So there's a lot more to be seen. I think the more people can get access to this product and make their own decisions about it, that's a good thing. But there are far more competitors in the landscape than there were even 3 months ago.
So what's your point? Things are going well for them or badly for them?
I think things are going well as long as we're talking about this just as a single product. But I think what we're seeing in some of the volatility on the stock is people are beginning to ask, what's the long game here? This sector is projected, the plant-based food sector in general is projected to hit between $15 and $40 billion over the next decade. So where do you go after 3 quarters with a single product or even a few products? Is there more to the Beyond story beyond that? Is there more to Beyond than Beyond?
Brian and Kate, thank you both very much.
Thank you.
Still to come, it's a busy season for media disruption with new entries from Apple to Disney. We'll have a live interview with Ted Leonsis, who was an early investor in AOL and Google, and now the billionaire investor owns the Capitals and the Wizards, and we'll get his take on the value of live sports in the media space, amongst many other topics. That's moments from now.
There's golf.
Touchdown, Minnesota! Grabbed by heavily covered. Dives into the end zone for the touchdown.
Tonight, TuneIn has your Monday night NFL football with the Miami Dolphins at the Pittsburgh Steelers. Kickoff at 8:15 p.m. Eastern.
Quick throw out to the side. Taysom Hill across the goal line. Touchdown!
But Robbie's got an airborne. Robbie Gold's field goal is good!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Deep left center field. A grand slam!
October baseball is here, and TuneIn Premium is your ticket to the 2019 MLB postseason. Featuring the home and away feeds for every game, TuneIn Premium delivers every call of the ALCS, NLCS, and the 2019 World Series through the voices of the local radio broadcast teams.
Air, left field and deep. He's at the wall!
Now until a new champion is crowned, hear every play of the 2019 MLB postseason live on TuneIn Premium. Upgrade today.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
Get social with TuneIn. Follow us on Facebook, Twitter, and Instagram for the latest and greatest audio on the app. Explore exclusive content. Learn about hot new podcasts and get alerted when the big game, well, it's about to begin. Add TuneIn to your feed and be in the know when it matters most. These are the top buzzing stories on TuneIn.
Saturday Night Live makes fun of Kanye West.
Kanye West released his new gospel album, Jesus is King, yesterday. And it's also being reported that Kanye will be altering his old hits with more G-rated lyrics. So, yay.
Eddie Murphy talks about meeting Barack Obama.
He talked about my hair. He was like, how come your hair? He said, what kind of rinse are you using?
Those were the top stories that are buzzing on TuneIn.
Welcome back. Time for a CNBC News update. Sue Herrera's got it for us. Hi, Sue.
Hello, Wilf. Hello, everybody. Here's what's happening at this hour. In a letter to fellow Democrats, House Speaker Nancy Pelosi says the House will vote on Thursday on a resolution affirming the Trump impeachment inquiry. It will establish procedures for public hearings in the investigation and will set due process rights for the president and his counsel. Defense Secretary Mark Esper says the U.S. will reposition forces to secure oil fields in Syria. This after the U.S. forces raided the Syrian compound of ISIS leader Abu Bakr al-Baghdadi over the weekend. Esper says the oil fields funded al-Baghdadi's terrorism.
At the height of Baghdadi's reign, these oil fields provided ISIS with the bulk of financial resources used to fund its terror. U.S. troops will remain positioned in this strategic area to deny ISIS access to those vital resources.
And an historic win for New England Patriots coach Bill Belichick on Sunday. He became just the third NFL head coach to win 300 or more games, which includes both the regular season and the playoffs. George Halas won 324 games. Don Shula logged 347 wins. Congratulations to him. That is the news update this hour. Wilf, I'll send it back downtown to you.
So, thank you very much. Grubhub shares plunging after missing Wall Street's revenue estimates and a weak fourth quarter sales outlook. Mike, what are you looking at in these numbers?
There's been a controversial stock. They also had pretty poor cash flow guidance for the coming quarters. It's been a little bit of a case among short sellers, and there are a lot of them in Grubhub. It's about 22% of the shares are short, that it's really not a scalable business. That the economics of this food delivery kind of goes to the customers and the restaurants, not as much to the delivery service itself. Of course, Uber Eats is in there. It's very locally competitive, and I think the company has more or less confirmed that the competition in this area has become more intense.
Yeah, delivery is really sort of the big war space there for a lot of those restaurants. Shares down about 20% on that move after hours here. One other earnings news, Alphabet also under pressure after a huge profit miss. Beyond Meat beating Wall Street's earnings estimates. The stock, though, sharply lower because investors were disappointed by its full-year sales outlook, and T-Mobile beating on the bottom line but missing revenue expectation. Shares of Beyond Meat, they're down about 7.5%. Let's get back to Josh Lipton for more on Alphabet's results. Hi, Josh.
So, Courtney, I just got on the phone with Alphabet CFO Ruth Porat, provide a little bit more color about the quarter. She described this as a noisy quarter, said that in her words there were some unusual items, and she called out a couple. For example, she said there $545 million expense related to a legal settlement in France. That was one item. She also noted some unrealized losses related to certain venture investments as well. I did ask her which ones. Is it Uber or Slack? But she declined to specify there. On M&A, we talked about that as well. Listen, Google, like so many other big tech companies, certainly on the radar of regulators, and I asked her whether that's going to perhaps make it tougher for her to do big, meaningful acquisitions in the future. We know there are at least reports that U.S. antitrust enforcers are now reviewing that nearly $3 billion acquisition of Looker. Ruth Porat telling us that our view is that Looker acquisition does increase competition, not minimize it, in her opinion. So we're happy to engage, she said, with regulators on questions they may have. It does enable multi-cloud infrastructure. Asked her about competition as well. Listen, we just heard from Amazon. Their burgeoning online ad business growing very strongly. I asked her whether she considered Amazon a rival. Her view being that the market as a whole is growing. So in other words, suggesting that she doesn't think there has to be one winner in that market. Finally, we did ask her, CNBC did confirm that Alphabet did make this offer for Fitbit. We don't have a price, but we've confirmed an offer was made. Did ask Ruth Porat about that, but she declined to comment. Guys, back to you.
Good stuff, Josh. Shares of Alphabet down about 1% now after hours. Well, coming up next, we will break down the charts to find out why history says this market could be heading even higher after the S&P's record close today. Stay with us.
Hey, you. We didn't make Nature Valley Crunchy bars so you could just sit and scoff them in front of the TV. Not when you could be enjoying them outdoors. Up here! Race it to the top! With 100% whole grain oats and delicious honey. Nature Valley Crunchy. Get out more.
Hey, NFL fans, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can hear every NFL game live as it's happening, or catch it later on demand, anytime, anywhere, all season long.
Deep left center field, a grand slam!
A October baseball is here, and TuneIn Premium is your ticket to the 2019 MLB postseason. Featuring the home and away feeds for every game, TuneIn Premium delivers every call of the ALCS, NLCS, and the 2019 World Series through the voices of the local radio broadcast teams.
In the air, left field and deep. He's at the wall.
Now until a new champion is crowned, hear every play of the 2019 MLB postseason live on TuneIn Premium. Upgrade today.
From the TuneIn Studios, I'm Fonseca with your daily sports update. On a day when the San Francisco 49ers moved to 7-0 for only the second time in franchise history, it was rookie defenseman Nick Bosa and veteran running back Tevin Coleman who made some history of their own. With their 51-13 domination of the Carolina Panthers, the Niners are 7-0 for the first time since 1990. The team was the only other one in franchise history to reach the mark, starting 10-0. More football? Well, it's happening tonight for Monday Night Football. Kickoff's 8 p.m. Eastern right here on TuneIn.
Right now, instead of hearing this, you could be listening to the music that keeps you moving with TuneIn Premium. Find today's biggest songs and all of your favorites commercial-free. Visit TuneIn.com/premium to upgrade.
Catch the latest news as it happens with MSNBC on TuneIn. From American politics to global events, when breaking news hits, you'll never miss a moment again. Search MSNBC on TuneIn to hear the latest.
Far wing elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut it.
The sideline, the man fleet for three.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Pump fake in the lane, turnaround jumper from 8 feet is good on the
Search
right block.
NBA Today to start listening.
Welcome back to the closing bell. Let's send it over to Mike Santoli. He has his third dashboard of the day. Hey, Mike.
Hey, Courtney, one of these big issues, people trying to figure out just exactly what are investors collectively positioned for in the way of the economic outlook. Well, here are two ways of viewing that. First of all, the ISM composite, so just showing the trend in the economy right now. You see this plunge in the ISM composite recently. So that shows you that the outlook for the economy has darkened, or at least the coincident indicators are not looking great. And then here you see in blue, this is equity positioning by big investors. So in other words, just exactly how much exposure investors have to equities. And you see it's a little bit above neutral. Now, the Deutsche Bank Asset Management folks will probably point out that this is a pretty big gap right there. And maybe it suggests that investors, even though they're neutral or just better than that, are expecting a little too much out of the economy. I would immediately look at this one, though. Right here is another instance where you had positioning right around the same levels, and you had a pretty poor ISM outlook. That was in late 2016, and that was another period that was analogous to this one. Very low bond yields. You had a recession scare and an earnings slowdown, but not a recession. So that is the optimistic take on this. Basically, investors don't necessarily have it wrong in this instance, Courtney.
Equity investors felt good today, pushing that S&P to new highs as well. Thank you, Mike. Well, coming up next, we're going beyond the bundle. It's a big week for media with the unveiling of HBO Max tomorrow and the launch of Apple TV Plus on Friday. So here on the closing bell, we're going to be looking at the changing media landscape all week. And today, we're going to focus on sports and streaming with internet pioneer and owner of the Washington Capitals and Wizards, Ted Leonsis. That's coming up next.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
Major League Baseball postseason is in full swing, and TuneIn Premium puts you at field level for every
And it's a home run.
single
And gone.
game.
And that gone, a home run.
With TuneIn Premium, catch every pitch of every inning of every Major League postseason game until the final out of the World Series.
0-2 pitch, little half swing, and it hit.
At home or on the road, Major League Baseball's postseason action is on TuneIn Premium.
And that ball is gone.
Upgrade today.
Ah, finally another commercial, said no one ever. Visit TuneIn.com/premium to upgrade now and get over 45 commercial-free music stations.
Far wing elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut
To the
it.
sideline, the Van Fleet for three.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the
Search
right block.
NBA Today to start listening.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
From the TuneIn Studios, I'm Fonseca with your daily sports update. Anthony Davis had 29 points, 14 rebounds, and Dwight Howard added 16 points, 10 rebounds, 4 blocked shots. The Los Angeles Lakers 120-101 victory over the Charlotte Hornets on Sunday night.
LeBron give it to Dwight Howard, hands it right back to LeBron. LeBron with Royce O'Neal on it. Using Dwight Howard as a pick, drives to the basket, throws it up, in, and a foul. Wow, LeBron's taken over the game.
To catch all the NBA games, search NBA and favorite your team.
Welcome back. Some big movers in the after-hours session. Alphabet, Grubhub, and Beyond Meat all lower on earnings, though Alphabet is well off its lows. It was down over 3%, it's now down 1.25%. And Mirati Therapeutics getting a big boost on drug trial results. The stock is now up nearly 30% in after-hours trade.
It's a big week in the world of media and streaming, and here on Closing Bell, we're launching a new week-long series called Beyond the Bundle, where we'll dive into the shifting landscape of the entertainment universe. Julia Borston has more. Hi, Julia.
Well, Courtney, the streaming wars are certainly heating up this week, with AT&T giving details on its big streaming play, HBO Max, at an investor presentation late tomorrow. Investors or consumers are hoping to learn the price of its service, which is expected to include the assets of HBO Now, which costs $15 a month, plus additional library content and programming. Then on Friday, Apple TV Plus launches for $5 a month, or free to anyone who buys an Apple device. Also on Friday, Netflix's The Irishman is opening in limited release in theaters before it'll start streaming on Netflix on November 27th. Netflix, Apple TV Plus, HBO Max, along with Disney Plus, which launches in 2 weeks, are chasing subscribers by teaming up with distributors. Disney's working with Verizon to give away a year to 50 million Verizon customers, AT&T giving HBO Max to 10 million of its customers, while T-Mobile is partnering with Quibi, which launches next year. Now, of all of these, Apple has the biggest head start, with Gene Munster projecting 280 million Apple devices will sell in the next year. And then the question will become, how many of those who get a free or subsidized trial convert to longtime subscribers? Wilf?
Julia, thank you very much for that. And for more on this new media environment, we're joined by Ted Leonsis, Monumental Sports and Entertainment Chairman and CEO. Monumental Sports owns a number of teams, including the NHL's Washington Capitals and the NBA's Washington Wizards. A very good afternoon to you. Thanks so much for joining us.
Thank you for having me. We're here in Detroit at the Forbes Under 30 for all the entrepreneurs here, and just came out of meetings with all of the heads of marketing for all of the teams here in Detroit, and I think everyone is very, very bullish about the content and the assets that we own in professional sports leagues.
Well, let's explore that a little more, if we may, Ted. I mean, ratings for some high-profile sporting events in the last 5 years have been up and down, as opposed to just on the up. Do you think that means that the value of live sports rights has peaked?
No, I think just the opposite. Live sports is still the greatest way to convene a large audience, both on a national and local basis. In Washington, D.C., the Nationals been in the World Series and obviously sold out every game, 45,000 people, and another 45,000 people outside. But their ratings, I think, for the last three nights were in the 15 and 20 range. And if you go down the list of the top 100 rated shows, it's still sports programming and live events. The big challenge for us, and why I think the Apples and the Netflixes will be very, very interested, is how do you get a new consumer who perhaps won't ever get onto the cable plant, who won't subscribe to cable. And they're looking for this new direct-to-consumer OTT. And we know how to place a value. We know what it costs to get into a game. We know what you spend on merchandise and the like. And so sharing that data and working with partners. So my belief is that Amazon Prime, a Netflix one day will become large buyers of our content. Amazon for Prime, I think, is going to be the biggest next generation cable company. They're already doing movies, but live events that can bring people together, and then you're able to sell advertising around it, not just a subscription. That's the route that NBC and Comcast is going more towards. How can they extend their audience to people outside of the plant and make it advertiser friendly?
And is that because Amazon and Netflix as well also have these built-in audience bases? You've got Disney and Apple that are beginning their new streaming services here coming up in coming days. Is that something that is way down the line when you're considering sports streaming on a platform like the newer two?
Well, you're talking about redefining a bundle, and I think that that's a really, really smart thing. No longer will the bundle be just take telephony, take data access, take unlimited video. I think you're going to see real world things, and that's what Amazon did. They took delivery as the killer app, and now they've been bundling in lots of other things, and streaming media is very, very important. But to be able to bring live sporting events and access to tickets using all of their infrastructure and touch points, I think the same with Apple. And we're starting to see our businesses and buildings themselves really become big streaming media platforms. We in Washington, D.C., we've just spent about $40 million this summer in making big screens. We installed 25,000 square feet of new pixels. We will be doing streaming. We'll be doing real-time gaming. I think that gaming and the gamification of sports and betting will really drive the value of our sports programming and help engagement. You'll be watching the game to the very end. We just did a big deal with William Hill, as you know, here in Washington, D.C. I also think esports, NBA 2K, the NHL is about to come out with its esports as well.
Ted, thank you for being here with us on this big week as the media landscape continues to change. Ted Leonsis.
Thank you.
Well, up next, Alexa, pay my bills. Amazon announcing early today that it's tapping into the payments space. We'll hear from the head of Amazon Pay coming up.
Swinging a long drive, left field. He's got one now. Kurt Suzuki gives the Nationals the lead.
The excitement of the Fall Classic is here, and you can hear every call of the 2019 World Series on TuneIn Premium. The action continues this Tuesday with Game 6 between the NL champion Washington Nationals and American League champion Houston Astros. Listen live at 8 Eastern as two of Major League Baseball's most storied franchises look to bring home the World Series title. The 2019 World Series is on TuneIn Premium. Hey NFL fans, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can hear every NFL game live as it's happening, or catch it later on demand. Anytime, anywhere, all season long.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Good. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
From the TuneIn Studios, I'm Fonseca with your daily sports update. On a day when the San Francisco 49ers moved to 7-0 for only the second time in franchise history, it was rookie defenseman Nick Bosa and veteran running back Tevin Coleman who made some history of their own. With their 51-13 domination of the Carolina Panthers, the Niners are 7-0 for the first time since 1990. The team was the only other one in franchise history to reach the mark, starting 10-0. More football? Well, it's happening tonight for Monday Night Football. Kickoff's 8 p.m. Eastern right here on TuneIn.
Far wing, elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut
The
it.
sideline, the man bleed for 3.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the right
Search
block.
NBA today to start listening.
Welcome back. Amazon tapping into bill payments with Alexa. Our own Deirdre Bosa is with us now with the head of Amazon Pay. Dee, over to you.
Hey, Court, thanks for that. Yes, Patrick Gauthier, VP of Amazon Pay, thanks for being with me today.
Pleasure.
Let's get right into it. Courtney mentioned this announcement. You're going to allow customers to use Alexa devices to pay for their bills. What indication do you have that customers want this, especially when pickup to actually buy products through the Alexa has been slow?
The announcement we made about Alexa is actually broader than just pay. What we found through research is in the U.S., 68% of consumers actually choose to not be on auto pay. Last year, 14.7 billion invoices for utility were sent. 68% of those customers want to feel they have the control over when and how to pay for it. So as we dug, we realized the reason why people do it is they want to understand their consumption, and they also want to have the choice of when to pay. And many people have experienced I open the bill, I put it on the kitchen table, and I forget about it. And so we thought we could do something about that. Alexa is about fixing everyday problems, and we thought we could do that.
Now, I want to talk to you a little bit more about Amazon and the payment space at large. You guys just reported last week, Amazon at large is seeing slowing growth in e-commerce. You see other companies like eBay make a big play in payments. You're even seeing other big tech like Facebook and Apple. What is Amazon's end game? You guys are doing it sort of piece by piece with lending, with cash, with Amazon Pay. What's the end game?
Well, at Amazon, we always start from identifying a customer problem. Whether that customer problem is a merchant, hence lending to the merchant, or whether it's consumer and removing friction where customers are buying or are contemplating purchases. So the end game for Amazon, if there is such a thing, is always about raising the bar for the customer experience. And what may look like disparate moves, when you put it into that context, is absolutely consistent in terms of our goal.
How closely are you looking at the space, the fintech space, and developing either in-house or acquiring companies that would enable you to serve the customer better through payments?
Starting from customer pain points and working backwards, we're constantly looking at the things that we should be building and the things where we should be partnering. For instance, earlier this year, we partnered with WorldPay in order to really reach more merchants. And our announcement for Alexa and Bill Pay is with a company called Paymentus. So for us, it's fairly natural to go through this. Should we build this or should we partner? And it's a constant part of how we approach the opportunity.
Okay, well, we look forward to hearing more. I know you guys haven't updated those Amazon Pay numbers since the end of 2016, but guys, we're hoping for them. I tried to ask him. He wouldn't give them to me.
Well, that's because we want to keep you on edge.
Yeah, maybe next time. Guys, back over to you at the Stock Exchange.
Deirdre and Patrick, thank you very much for that. Nice try. I wish we got a little more information from them, too.
Still to come here on Closing Bell, it's the busiest week of earnings, but there's another key story investors need to watch tomorrow. The details coming out.
What I love most.
Major League Baseball postseason is in full swing, and TuneIn Premium puts you at field level for every.
And it's a home run.
Single.
And gone.
Game.
And that gone, a home run.
With TuneIn Premium, catch every pitch of every inning of every Major League postseason game until the final out of the World Series.
0-2 pitch, little half swing, and it hit.
At home or on the road, Major League Baseball's postseason action is on TuneIn Premium.
And that ball is gone.
Upgrade today.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
Get social with TuneIn. Follow us on Facebook, Twitter, and Instagram for the latest and greatest audio on the app. Explore exclusive content. Learn about hot new podcasts and get alerted when the big game, well, it's about to begin. Add TuneIn to your feed and be in the know when it matters most.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Start hearing more of what you want. Upgrade to TuneIn Premium and get over 45 commercial-free music stations, live commercial-free news, and every live NFL, MLB, NBA, and NHL game. Visit TuneIn.com/premium to upgrade.
Far wing elevates.
Triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut it.
The sideline, the man bleeds for 3.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the
Search
right block.
NBA today to start listening.
These are the top buzzing stories on TuneIn.
Saturday Night Live makes fun of Kanye West.
Kanye West released his new gospel album, Jesus is King, yesterday. And it's also being reported that Kanye will be altering his old hits with more G-rated lyrics. So, yay.
Eddie Murphy talks about meeting Barack Obama.
He talked about my hair. He was like, how come your hair? He said, what kind of rinse are you using?
Those were the top stories that are buzzing on TuneIn.
It's been a wild hour for earnings after the close. Alphabet under pressure after a huge profit miss, although the stock is well off its lows. Some of those misses on the bottom line, one-offs. Beyond Meat beating Wall Street's earnings estimates, but the stock is sharply low because investors were disappointed by its full-year sales outlook. And T-Mobile beating on the bottom line, but missing revenue expectations. All of those stocks trading lower after hours.
And it's another big day of earnings tomorrow. We're going to hear from BP, General Motors, Kellogg, Amgen, Mondelez, Electronic Arts, Yum China, and many, many more. 140 this week. Something else we're going to be watching. Boeing CEO Dennis Muilenburg is headed to Capitol Hill. Phil LeBeau is here with a preview of what to expect. Hi, Phil.
Hi, Courtney. Dennis Muilenburg is likely to get hammered tomorrow from senators on the Commerce Committee when they question him about the 737 MAX. And 3 areas are going to be things that people are going to be focused on. First of all, what kind of pressure did Boeing engineers feel when they were developing the MAX? Was there pressure from the higher-ups? And did Boeing mislead regulators? And the big question for a lot of people, will Dennis Muilenburg show contrition tomorrow? He has said in the past, we own it. In fact, he just released his testimony within the last couple of hours. You take a look at shares of Boeing. Remember, tomorrow, guys, is the 1-year anniversary of the Lion Air 737 MAX crash in the Java Sea. Guys, back to you.
Phil, thanks very much. We look forward to that. Mike, final thoughts. Record all-time close for the S&P and NASDAQ, just a hair from its own.
Yeah, we're benefiting from the fact that not very many people were positioned for this market to take off the way it has. I also think that negative earnings responses have not really bled over into others. I'm seeing Facebook actually bid slightly higher on Alphabet's miss today. So if that pattern stays intact, it's probably decent for the market.
We are out of time here. Thanks very much for watching. That does it for Closing Bell.
Fast Money begins right now.
Live from the NASDAQ market site overlooking New York City's Times Square, this is Fast Money. I'm Melissa Lee. Your traders on the desk are Tim Seymour, Brian Kelly, Dan Nathan, and Steve Grasso. The S&P 500 closing at a fresh all-time high, boosted by the promise of China trade progress and strong earnings. But that second part leads us right to Alphabet, which dinged that trend. The tech giant missing profit expectations. Shares are down right now by more than 1%. We've got full team coverage to break down these results. Fast Money friend Gene Munster is in Minneapolis to give us his take on the quarter, but we kick things off with Josh Lipton live in San Francisco with the details on the results. Josh.
So, Melissa, I just spoke to Aaron Kessler from Raymond James just to get a quick take from the street. His point, strong results, he said, Melissa, on the top line, beat consensus there. Google Properties revenue, so that's the properties the company owns and operates, search, YouTube, 19% to $28.7 billion. That was above what Kessler was looking for. Operating expenses, though, were higher than expected, he said, at $13.7 billion. Now, there I did have the chance to speak with Alphabet CFO Ruth Porat. She called this a noisy quarter in her words. She said there were some unusual items. She pointed out, too, $545 million expense related to a legal settlement in France. Also called out some unrealized losses tied to certain venture investments, though she declined to say which ones. Switching gears a bit, I asked her about competition. Listen, we just heard from Amazon. Their burgeoning online ad business is growing very strongly. I asked her how much of a threat she thought Amazon was. Ruth Porat seeming to suggest that really the online ad market continues to grow here. In other words, her point being that there doesn't have to be one winner. It's not winner take all. Asked her about Waymo, too, as well. Interestingly, you did have the team at Morgan Stanley. They recently cut their valuation there by 40%, in part because they said the industry is just moving toward commercialization slower than expected. I asked Ruth Porat whether commercialization of these self-driving cars, at least is it on track with your own internal expectations? She seemed to suggest to me, listen, we're going to be prudent, we're going to be responsible and cautious, that it's a long-term opportunity, which they're going to continue to shoot for, remain committed, she said, to providing the best experience for users. And finally, Melissa, Google, like other big tech giants, certainly under increasing regulatory threat, as well as lawmakers. I asked her specifically about Senator Warren, Democratic presidential candidate, has called for breaking up Google, has said Google, like others, is just too big. They stifle innovation and competition. I asked Ruth Porat, what does she think Senator Warren gets wrong? And she told me, listen, we have consistently shown that our business, in fact, is designed to operate to serve customers. We, in fact, she says, expand choice, we lower price, and we create competition. Guys, back to you.
All right, Josh, thank you. Josh Lipton in San Francisco. So we got the stock down more than 1%. Keep in mind, in today's session, the stock hit a record high. Dan, what do you make of this quarter, especially as a lot of these are sort of one-off items?
Yeah, I think the one-off items, that's what the CFO kind of spoke to, the fact that they are just not something that you can model out going forward. I just make, one point here is that obviously Amazon last week, the headline looked really bad. That stock was trading down 7% in the aftermarket. The fact that this thing is basically unchanged, I think investors are taking heed. The growth in their own properties is really good. I mean, here's a company where I know that Tim will speak to the valuation, where you're seeing a downshift, though, in EPS growth year over year for 2019 and expected in 2020, but you're still seeing sales growth at 20%. So on a PE to growth, it's going to start to look expensive. The last time we saw it nearing 2 was 2013, and the stock had a down year in 2014. So it might be getting rich on some of these metrics, especially when you think about regulatory and you think about competition in the cloud and some of these other areas.
Right, and so I would want to bring up that I think I could see this at roughly 18.5 times. I think it's too cheap for all the drivers they have. But I agree with what you're saying, and there's certainly risks to the company. By the way, I love Ruth Porat. I think slowly but surely she's bringing more transparency. When she talks about some of the sloppiness of at least the quarter of the modeling out, she's someone that really you listen to, and she's someone that you don't take this as a smokescreen. I think she's bringing a lot of transparency, and as we get more into the capital market side of what they do with $120 billion in cash, I think you listen to that. But again, if you look at Google sites, XFX, FX neutral, around 20% is what I think you want to see. Remember, if we're looking at the bottom line on Google, this is not what we've tended to look at in the past. I think we still want to see the top line. The fact that this is an OPEX heavy number doesn't really bother me at all. I think these are great numbers. 26% off the June lows into earnings. What do you want? I think this is just a breath of,
And your point on the operating expenses, right? Those are investments to get growth. So you kind of have to say, all right, this is one quarter where the company invested some money so that their business model can continue to grow. And if you look at it, the thesis isn't broken on this. You look at their ad search revenues. Those are still up. That thesis hasn't broken. Other properties doing well. That thesis hasn't broken. So if you can look past, and I think the market will look past this 1 quarter of investment, then I think you see the stock break to new highs again.
To Dan's point, it has already. It's only down 1%.
Yeah.
It's still above all its moving averages. You would think that the positioning going into this print was extremely negative. I think it's a buy coming off this print for everything that these guys had said. I'm unhappy that there was a miss, though, but that's the only concern.
What is the difference between Google, or Alphabet, I should say, having an OPEX heavy number with margins crimped because of it, versus an Amazon or another company? I mean, why is it okay that they do this here and we look through it?
Because this is one quarter, whereas I view Amazon as there's going to be multiple quarters of investment. So when Bezos tells you we're going to invest for the next year, you can then model out and say, you know what, it's not going to look like what it used to. This is just one quarter. Market will look past it.
Well, it's interesting. I don't know why Google is up 2.5% today going into this print today after it had such a big run. I think one of the reasons why is there's apparently some secret discussion about investing in fulfillment and logistics and suddenly getting into a broader business model. These are some headlines that were out there in addition to the Fitbit story, but I don't think that's the reason why people get excited on a Fitbit acquisition. So they could be investing into broader, ways to get involved in some of the same businesses as Amazon.
And I don't think the market is saying that it's okay or any. I think the positioning was the issue. People were overwhelmingly negative due to antitrust going into this print versus Amazon.
Dan, what's your take on
Yeah, so here's let's look at the MAGA complex: the Microsoft, the Amazon, the Google, and the Apple.
It's now a complex.
Yeah, it is a complex. I mean, but these are all these hovering around $1 trillion in market cap. And Microsoft broke out today, but not really convincingly. It has been in a 3-4 month range here. Amazon is kind of stuck in the mud, never got back to its prior highs. Here you are. It's very interesting to me. I think a lot of investors were looking to play for that breakout in Alphabet to new all-time highs. We know that 2 quarters ago it traded 1,300 and then went all the way down to that level Steve was talking about in early June. That was a 20% peak to trough decline. So made it all the way back.
Is it too early for a would you rather? Because I feel like Dan set up.
No. I'm just saying that it's interesting that the S&P 500 made a new all-time high. Microsoft and Apple have obviously run into this sort of thing. Microsoft not convincingly so. Apple later this week, I think we're going to have a really interesting test.
I think that shows but the market's changing its stripes, right? People are underinvested in cyclicals. They're moving into that. You bought your MAGA complex because there was revenue growth, and that was the only place that you could find growth, right? In a slow growth environment. So now that we get trade headlines, now that we get some of this uncertainty out of the way, people are starting to bet that, all right, we're going to have economic growth. Whether we're right or not, I don't know.
All right, for more reaction to Alphabet's results, let's bring in Loop Ventures founder, Fast Money friend, Gene Munster. Gene, great to see you again. What did you make of this quarter?
Solid quarter. Another reminder that Google is, in fact, the oxygen of the internet. 22% revenue growth. That compares to 22% in the previous quarter. This is adjusting for FX. Surprisingly, they have grown their revenue in the 20 to 24% range now over 17 consecutive quarters. And to put that into perspective, if you look at Facebook, 17 quarters ago it was growing in the mid 50%, and now it's growing at 25%. And so that is the definition. Google, in the case, is the definition of defying the law of large numbers. And I think that theme about being the oxygen of the internet also plays through what the stock is at today. And effectively, we're close to all-time highs. This is a $900 billion market cap, and I think that it was a solid quarter. One other piece that really jumped out at me was the paid click number. So that is the clicks, how the year-over-year growth in clicks was up 18%, a slight deceleration from the mid 20% last quarter. But the cost per click, or what they get paid on each click, was down only 2%. It was down 11% in the previous quarter. If they ever get that intersection where both paid clicks are growing and they're actually growing profitability or growing price per click year over year, if they can get that, I think you're going to see a nirvana on the stock.
In terms of monetizing other platforms, Gene, I mean, how does Alphabet keep up that growth streak at that magnitude? If the areas for monetization could be sort of capped or reined in by regulators, and I'm talking about YouTube primarily.
So that's the big question here, is the regulatory piece, and it's one that they have a kind of a standard response to, which is that they've dealt with regulatory environments in the past and they've continued to navigate them. Ultimately is that will weigh on the multiple. I think that Google's a great story to own. Let's see what happens with the earnings call here tonight. But ultimately, it's a great story to own. But what you said in the regulatory environment, we have quite a supercharged political environment that is going to go. The easiest target here is Google. We talk about YouTube, we talk about Maps and Search and how they tie those together. Google has over 40 products, consumer-facing products that they tie together. And ultimately, I think that we're a long way away from getting to the bottom of that. And it's more probably ultimately headline risk, but that will, I think, continue to needle at the stock's multiple over the next year.
Hey, Gene, it's Tim. Can we talk a little bit about cloud and how these guys have nudged themselves right in the middle of Amazon and Microsoft, or somewhere in that group? Certainly the multi-elemental part of the platform that has people and a very sticky user base involved, and what that does to your multiple, and talk about, kind of a blended multiple here as well.
So their cloud business, they don't break it out, but it's in the other revenue, or the non-ad revenue, and it was probably up 35% year over year. That is effectively slight deceleration from last quarter for Google Cloud. It was the exact same growth that AWS had in the quarter that they just reported, and so think of them as essentially maintaining market share in a bigger market, in a growing market. In terms of the concept of sum of the parts versus the total, when I think about the Google story, my thought in large cap has been evolving toward this, is to kind of put it all together and see what that ultimately drives in terms of revenue growth. In the case of Google, it's just been remarkable. We talked about the revenue growth before. And so let me try to just quick put one final piece to it. I think you can look at a story like Google and think of this as the information oxygen of the internet. And I think it should trade like a consumer staple company in the mid-20 multiple range, which effectively it's trading at right now. I think you look at another company like Apple and what they're doing around services and devices and being a consumer staple around that. I think that should also trade at kind of that mid Coca-Cola-like multiple. It's currently in the high teens. And so when I think of the sum of parts question, Tim, it's more about kind of looking at it all together. I don't actually carve out, I'm not answering your question, don't actually carve out Google Cloud.
You did very well, thank you.
All right, Gene, we're going to check in with you a little bit later on as the conference call is getting underway. So we'll see you later. And just last Friday, we should remind you, our chart master was eyeing Google for a breakout to new highs. Well, he's back. Carter's back. He's over at the Plasma to tell us what to expect from Alphabet now. Carter.
Well, it looks like that breakout is going to be deferred by a day or two, which is to say we're not getting it, but I think we will. The key number here, at least by my work, would be the following: 1, 2, 6, 4, 30. That's where the stock closed on Friday. So if one went into the weekend and owned the stock, and one has done nothing today and is living through this right now, we can of course see that after plunging as low as 12.30, the stock is trading at 12.75, meaning even as it opens here tomorrow, one is up from where one was just on Friday last week. So in terms of the breakout, it's just going to be deferred. It's not going to break out tomorrow, but the key is that these levels are deadly precise, and often you have to contend with the prior high before exceeding it, and ultimately, of course, I think Google will exceed it. Apple has broken out. Big stocks like a JP Morgan or a Nike, ultimately this one will as well. In terms of how precise this is, and this speaks to the importance not of the charts that I'm showing you, but charts in general. Is it random that this high in July was 12.91, and this is 12.96, this is 12.96? Of course not. People look at 52-week highs, algorithms hunt them down, and then there is momentum. If and as you break out in a big way. One of the things about a breakout is there's no one who's unhappy once it's making new all-time highs, unless you're short, which represents prospective more buying as people have to cover. So the setup is this, the setup is this, the setup is this. It all suggests that while it is going to be deferred tomorrow, it is what's going to happen for Google. In terms of the market overall, just because it is a big day, this day here was the highest weekly RSI reading ever recorded in the history of the S&P. That includes 1929, 1987, and the dot-com peak in 2000. And if you draw the internal trend line since that day, every time we have come up against this line, we have backed away. And since that peak, stocks have underperformed cash, underperformed bonds, and underperformed gold. We are right up against that level again, and earnings are out of the way. I don't quite see what the catalyst is to get us above that line. I think once again we'll struggle right there.
You know, Carter should come on over.
I think he's got
Carter.
he's got a lot to talk about.
Will's going to bring the chair in.
A lot to talk about.
Yeah, lots of questions for Carter.
Thank you, Will.
Will? What's going on?
Welcome.
Will your view of the
treats? There's nothing to eat.
No, I told you.
We don't. By the way, we're on a health food diet.
We
have a nut and fruit bag now.
Some super fruits for you.
So in terms of your view on the S&P 500, will any of that change based on this deferred breakout of Google, Apple's earnings later on this week,
so
or any of the other big earnings.
What's interesting is if you think about there's latent potential and then there's exploitation of potential, right? A stock sitting at a breakout juncture represents potential. If and as it breaks out, you've exploited some of that potential. So JP Morgan represented potential, it has broken out. Nike, it is broken out. Apple, it is broken out. And others have not, Netflix, Amazon. But once they're out of the way in terms of earnings, what is the potential here to press us to big new highs? It would have to be a further spike in cyclicals, which a lot of people are making that bet, but I think they've come a long way. Or it would have to be other breakout candidates carrying the load. And as you go through the earnings period, there are fewer and fewer stocks in a position to break out because we've heard from so many of them. So I think you get to that line and you back away from that line just as we've done repeatedly.
So Carter, I could draw the similarities to the S&P over the same thing, sort of a tag on along to what Melissa just said on Google stock. So every time we got to a certain level, backed off. Every time we get that certain level in the S&P, backed off. The charts are similar, not the same. Why one is more likely to break out versus the other?
One is making incremental new highs. That's an ascending or internal trend line in the S&P. The Google is flat tops at a common level. So Google's made no progress, where the S&P is making slight new highs, which kind of draws capital in, makes it think it's okay. But again, if a risk asset is underperforming gold, cash, and bonds for 2 years, the bull would say that's the opportunity. It's taken so long and nothing's happened. The bear would say this is what a topping process is like.
So to talk about the S&P, so here we are, that October 1st, 2018 high, we're about 3.5% above that now, and it's the end of October 2019. So you just mentioned incremental highs. All of those highs that we've had over the last year have been above that 2018 high. Does that set up very bullish to you? I mean, the longer that we've had this
what you need is if you take the exact same day and you look at the New York Stock Exchange composite, the mid-cap composite, the Russell 2000, the transports, the banks, none has exceeded that high. So you have that bifurcation or divergence with so much money in a few big names. And for the most part, they've done well. Apple's done well, Google's done well. But now Amazon's a little bit of a struggle, Netflix a little bit of a struggle. So it's case by case. But what we do know is that if you take the broadest